향기만 남기고 갔단다. 꽃향기만 남기고 갔단다. You and me 미칠 듯이 뜨거웠지만.
Hi, this is Kieran from VIA Value Investing Academy. Now, thanks for joining another evening of our deep dive series. And before that, if you have joined us much earlier, you will have watched this short MTV about a Korean pop group called BlackPink. By the way, if you are a social media addict, right? If you have pay attention to IG, Facebook, or TikTok, you would have come across this video very, very often. In Chinese, it's like a brainwashing song. It keep on appearing and appearing until your entire brain is brainwashed with the hand gesture. But anyway, thanks for joining us again. So right now, I'm just going to share my slide and just to make sure that all of you can see. If you can see my slide right now in full screen mode, and if you are able to hear my nasal voice, right? Because a bit blocked nose, huh? Yeah, can you please type 1 in the chat so that I know that everything is fine? Yeah, excuse me, it's a bit nasal, right? Okay, everything is fine. Let me introduce to you this K-pop group called BlackPink. If you look at the extreme left, their names are as follows. You have Rose, who is this lady on the extreme left, Jisoo, Jennie, and then Lisa. The interesting thing is, excuse me, right? The interesting thing is when you're being famous, your brand name will appear in a lot of merchandise. And of course, the one that is most popular is this Oreo. You'll be surprised, I have 2 daughters, right? And then when they go to Sheng Siong, they, instead of looking for a normal Oreo, they like to look for, BlackPink Oreo. So I was thinking, what's so fascinating? So what I did was I bought this one, right? The one on the left, and I bought the one on the right. Yeah, I think I bought the middle one as well. So actually it's the same. You see, if you look at the one in the middle, right? It's same, right? It's the black flavored cookie with the vanilla cream. So it's the same. Yeah. So this one, even though there's a bit of coloring, which is pink, actually it tastes the same. So I think branding is really powerful. When you're really famous, as long as your face, your name is being printed or any merchandise, you can increase the selling price of the merchandise by a certain premium. Yeah. So this is BlackPink. Now then, of course, other than cookies, you can see, I went I Google, right, BlackPink merchandise. So I came across this website, blackpinkstore.com. You can see all this lah. Yeah. But now as I look at this, I think I don't really feel much because you know, I'm quite I reached the uncle stage already. But as I look back during my teenager time, maybe in my late teens and so on, or during JC days, so I do follow certain pop group and so on. So I'm so fascinated by them. I collect their stickers. In the early days, it's stickers. You don't have cookies, right? Yeah. So I guess it's just a certain phase of life that we are very fascinated with some of the things. So I think as of now, my two girls who are P6 and Sec 3, right, teenager phase, they are very fascinated with this. Yeah. So at my phase, I think I'm more fascinated with the money that I could derive from all this. Yeah, so the key thing is, remember, they are a singer, right? Yeah, they're a singer. And they are a singer of a certain company. So let me just share with you the name of the company that they represent. Yep. Oh, by the way, just to let you know that BlackPink also has their own YouTube channel. So you can see their YouTube channel is 87.3 million subscribers. Yeah, they got so many subscribers with just about 500 videos. That's pretty amazing. So let's look at our channel, right? Let's look at our channel. Our channel, we have about 13,000. So 13,000 to 83 million is okay. You know, we are still taking one step forward, right? So our goal is to hit 1 million. 1 million. Okay, this is like a self-depreciating joke. Okay, but anyway, we also have our YouTube channel, which is a YouTube channel, which is at youtube.com/Value Investing Academy. We have about 13,000 subscribers. But of course, we started off with about maybe 2,000 subscribers. So we have grown like 6 times. As much as I can, we are producing a lot of videos, right? It's almost 600 videos. And what sort of videos that we have? I mean, when I say video, it sounds cheap, right? Because yeah, video, you know, YouTube channels are full of videos. But I think the things that we do is we produce educational, meaningful, relevant videos that are relevant to what's happening around us, so that eventually we can become a better investor. So if you look at this segment, we call it VIA Deep Dive Series, which is, you know, like tonight, one episode belong to this category, and we share a lot of things. Like, for example, previously we talked about Intel, and we talked about very famous or infamous a fund manager. Her name is called Cathie Wood. You know, many people like to follow her because she's very bullish about disruptive technology and so on. So there are a lot of things. Even the recent AI, artificial intelligence, even ChatGPT. So all this very useful, meaningful, relevant videos, right? They are relevant to the current era. Is all packed under our deep dive series. They are under our channel called youtube.com/Value Investing Academy, and we have our QR code over here. So right now, I think we have about 30 people who are joining us. So today is quite small. Usually it's about 100. So not many people are interested in BlackPink, right? Yeah, but it's okay. The 30 of you, if you don't mind, right? Can you please force yourself to scan this QR code so that we are 30 subscribers ahead of where we are right now. And then one day maybe we'll hit 1 million. Yeah, so don't mind, I just pause it for a short while. So this is QR code, just scan. You know, a message pop out, you just click subscribe. So what it means when you click on the button subscribe, it simply means that whenever we have a deep dive series such as these, you will be the first to be notified. Yeah, right now we are bombarded with so many things, right? So it's always important for us to set some form of alert system, and notification for YouTube is an example of alert system. Yep. So just scan your phone, just scan, thing pop out, just press. Okay, good. So let me just carry on. Just now I was talking about BlackPink, right? It's under this entertainment management company called YG Entertainment. So what I did was I went to this website. The website is called ygfamily.com. So you can see that BlackPink is here. Yeah, so when I come to the website, really there's a lot of stars, you know. Yeah, but of course, other than BlackPink, they break up, right? Because each individual, they also produce their own album, right? For example, the Jisoo one, it was Flower, you know, the MTV, Jennie over here, Rose over here. And they have, some of these, and I have no idea who they are. Yeah, so I think there's an age gap. Oh, there is this Krung. Interesting, huh? I have no idea what's this. So these are really cute stuff, but I just want to keep myself updated, right? So that when I talk to my children, people who are much younger, at least I could close the gap. So YG Entertainment. So initially, we started understanding about BlackPink, and then BlackPink is being represented by the YG Entertainment. And then YG Entertainment, just to let you know, that it's a public listed company in Korea. But of course, since we're talking about making money or investing, right, the first thing that comes to my mind is this YG Entertainment profitable? So you can see this is the zero line, and this line, right, represent the net income. Net income is simply means that revenue minus all the expenses that they have. So if the number is a positive number, so most of the numbers are positive, it's profitable. If it's a negative number, it's not profitable. So there's 1 year that's negative, and you see this line, I'm not very sure what it means. It goes up over here, it comes down, and assuming that this is an odd ball, it comes down over here and then it goes up. So from a value investing perspective, we want the profit to be predictable. That means in the long run. So instead of going up and coming down, right, very cyclical, we want a line that looks preferably with a clear trend that it goes up. So this one doesn't look like it fits the philosophy of value investing. So we're going to give it a miss. Yeah, but assuming that it does fit into value investing criteria, right? I think for us it's also quite hard for us to really analyze because it's a Korean company, and we couldn't understand Korean. Yeah, I mean all this are in the annual report, so we couldn't do it. So we had to give it a miss. So if we give this a miss, and then we talk about the BlackPink for a start, so how does it work out, right? So eventually we realized that since they are entertainment, they sing. So somebody did organize concert and then sell their ticket. So we're just thinking, is there some companies that are helping them to sell their ticket? And if they are non-Korean, maybe if they are American company, that's easier for us to analyze. So what happened is we realized that there is a company that helped to sell the concert tickets of this BlackPink. And this company is called Live Nation Entertainment. And the website is here, livenationentertainment.com. Yep. So in summary, what's livenationentertainment.com, right? So it's an American global company that's founded in 2010. So it's pretty young, right? It's about 13 years ago, following the merger of Live Nation and Ticketmaster to become Live Nation Entertainment. So what does the company do? In summary, promotes, operates, manages ticket sale for live entertainment in the US and internationally, and of course includes the K-pop star BlackPink. So today, instead of YG Entertainment, we're going to talk about Live Nation, which is our deep dive topic for tonight. But as usual, I better read this out. So the disclaimer, right? So just take note, tonight we are analyzing, Live Nation. It's solely to illustrate the application of value investing methodology and various valuation methods in the context of real life companies, which is Live Nation Entertainment. So remember, under those circumstances, does any of the information provided tonight represent a recommendation whether to buy, sell, or hold any stocks? So remember, we do not take into account your individual characteristic profile or the risk appetite of you, any given investor. So remember, in no event shall VIA or any of the author, which is typically me and Hillary, are liable to any of you, not for any damages of any kind arising out of the use of any content here. So remember, neither my Kinesis Investments, Private Limited, or VIA, nor me and Hillary are operated or affiliated with any broker or licensed financial advisor. So in ours, we are not licensed by MAS to give stock recommendation, which is why there is this last sentence over here. Okay, got it? So we're going to start right now. So my job is quite easy, and my job is just to hand over to Hillary. So I'm going to pass my airtime to Hillary, and Hillary is going to go deep dive into Live Nation Entertainment. Okay, so Hillary, back to you.
Hi, good evening everyone. Thank you for coming and join us in our another deep dive series, and tonight we'll be deep diving into Live Nation Entertainment. So some of you might be wondering, like, why did we decide to look into this company where we always look into like certain companies that Warren Buffett buy or some hot stock tips, but now why Live Nation? I'll show you next. It's because when we were doing our research, BlackPink came up to our radar. And this news actually caught our attention because this person paid about 3,683 for BlackPink tickets. So this amount of money, maybe some of you can buy it for like maybe a better airfare to some countries for traveling, but this person purposely bought this ticket just to see BlackPink. So in your mind, you'll be thinking that, would you pay this much to attend this live concert? Or would you want to invest and grow your money instead so that you have more opportunity to go different places or watch even more concerts? So what is your choice? So this is what brought us to decide to find out more about this company to see, other than watching BlackPink, is there another way that whether I can invest, grow my money, and use the money that I earned from my investment to do something that I like? So now let's jump into the first part, which is the qualitative analysis. So for this one, Warren Buffett will call this as circle of competence. So first off, let's find out what is all about Live Nation, which Kaden earlier has mentioned shortly about Live Nation. So it's actually an American global entertainment company, and they specializes in promotion and also produce live concerts, live events. And it's actually one of the largest producers of this live entertainment, where they organize about 43,600 events for 7,800 artists in 2022 itself, which is at the end of the pandemic, which is quite impressive in my opinion. Then they operate in more than 48 countries, where the HQ is located in the US, Beverly Hills, which is near Hollywood if I'm not mistaken. And it's also one of the world's largest live entertainment ticketing sales and marketing, where you can see they sold more than 550 million tickets. And one of the subsidiary that they have is actually Ticketmaster. So this is also one of the subsidiary that sell BlackPink tickets. And it's also one of the world's leading artist management companies, where there are about 90 managers that manages more than 410 music artists. And you can see here Rock Nation is one of the subsidiary under the artist management. So some of the famous names could be Rihanna, Christina Aguilera, and also Alicia Keys are also being managed by them. And here for Maverick, when I try to look into their website, I can't see much about their artist info, but when I check on their social media, actually they are promoting Madonna, Red Hot Chili Peppers, and even U2. So it's quite impressive for this. Okay, so right now let's have a quick short history, like how does Live Nation come about, even though Kevin has mentioned about it. So it's actually come from SFX Entertainment, which was founded in 1996, and Ticketmaster itself was actually founded in 1976. So in 2010, when they merged together, they became Live Nation. So Live Nation itself is only a company, but it has many subsidiaries. As you can see, when I was going through their subsidiaries, it's over 50 subsidiaries throughout the world. So that means it's not only US, they also have subsidiaries in UK, Europe, in Asian countries. So I'll have a quick glance through like what are the famous subsidiaries that they have, which is Ticketmaster and TicketWeb. So for TicketWeb, it's mainly to sell tickets for smaller events and Live Nation concerts. And this one is mainly for media, sponsorships, and also advertisements. And House of Blues is actually a US company that operates the music venues, mainly in the US. And these are the management subsidiaries under Live Nation. So this is roughly what subsidiaries that Live Nation has. Okay, so as a company, we wanted to know that what are the products or services that they do to make money for the company. So the first thing they have is definitely live concerts, the live events that they organized, because they either organize the live events for their own at their own venues, or they rent a venue and then run the event. And they actually will book the artist to say that, hey, we are running an event, shall we organize it together or something like that. And then they will sell the tickets, advertise the tickets to the fans. Then the next part is the ticketing, where they will sell tickets for their own events and also on behalf of its clients. So earlier on, we saw that BlackPink was actually represented by YG Entertainment, but Ticketmaster helped them to sell their tickets throughout the world for their world tour, Born Pink. And they will definitely retain a portion of the service as its fee. And the tickets can be sold via the mobile app, the websites, or even the physical ticket outlets. And finally, the last part will be sponsorship or advertisement. So they will work with sponsors to reach out to more fans for their events to advertise. And they will help them to place advertising like the signages or online events and also promotional programs to let audience be aware of these events. Okay, so right now we wanted to know how they generate their revenue. So in 2022, they generated about 16.7 billion USD. And the revenue is mainly came from all these three segments. So we can see that more than 81% actually come from concerts, then followed by ticketing and also sponsorship and advertisement. Then in terms of geographic region, here total domestic operations is actually referring to the US, then followed by Europe. So we can see that US actually take up a huge chunk of this because it's actually an American company. Okay, so next, as a company, we wanted to know that is there anything special about them that why we wanted to look into this company. So this term coined by Mr. Warren Buffett is known as economic mode. So here is a pictorial to show better what is an economic mode. So you can see the castle itself is actually a company, and then surrounding it, the water is actually the moat. So last time in feudal areas, when attackers want to attack the castle, if the water body or the moat is wide enough, they will be having difficulty to attack the castle. So the moat is actually a protection. So if we bring back to the current sense, economic moat means that some of the competitive advantages that the company has, that they have against their competitors, so that the competitor will not easily take away their market share. So now let's have a quick look. So first off is their distribution network. So early on we know that Live Nation is actually a very big company where they can sell the tickets on digital platforms or throughout the world. And they actually have global offices in 44 countries. And they actually own or rent 338 music venues globally. Then, of course, they can reach out to a lot of fans, like this figure, 670 million fans. And also, back in 2022, they actually run shows for 7,800 artists. And earlier on, we also saw that they also manage more than 410 artists under their subsidiaries. And finally, they also work with sponsors. And back in 2022, they work about 1,200 sponsors, mainly in the consumer, financial, and also leisure sector. So that means they help them to promote their events, help them to run the sponsorship. And finally, how about their branding, such as like Ticketmaster? So from first glance, it looks legit, but these are actually qualitative. That means what we see on face value. But if we compare to another company may have something of this mode. So in terms of qualitative, is there anything much more figure, like much more numbers? So today we will introduce another one, which is in terms of quantitative. So for quantitative, what do we actually look at? We will look at ROIC, return on invested capital. So that means how well is the company is able to use the money that they get, that means the capital that they got from investors to generate a return. Then followed by WACC, weighted average cost of capital. Because for a company to have the capital to run the businesses, there's a cost attached to the capital. Like for example, the capital could become in terms of a debt. That means they borrow money from someone, so they are in debt, or equity, such as like sell their shares for their investors, so that the investors will have a part of the company. And here we will compare in terms of a graph. So you can see here, the purple line is actually the ROIC, and the black line is actually the WACC. So based on value investing methodology, we wanted to see that the WACC to be as low as possible, because we wanted to see that the cost of the capital that they got as low as possible. And preferably, the differences between ROIC and WACC is as wide as possible. So if the differences is much wider, that means the moat will be much bigger. But here you'll be able to see that, hey, the WACC is much higher compared to the ROIC. So what does this actually mean? It means that this is actually a negative. So in short, the company might not have a very significant moat. Because if you think in terms like, if another company is able to offer a better offer, like selling, have much more coverage to sell the tickets, or maybe the management able to help the artist to offer much more better privileges, will they jump over to another company? Then the answer, I believe you have to answer yourself. So other than that, since we saw that what the company is, and then how they generate revenue, and also look at whether do they have any competitive edge. So another thing we will also look at is what are their future plans to further grow the company. Because for a company to only last 1 or 2 years, we will not want to invest in that company. So we wanted to know that what else will the company do to further grow the company so that we can safely invest our money to grow together with the company. Okay, so let's have a recap that the business of this company is to promote live events, sell tickets, and also offer sponsorship and advertisements for their sponsors. And one of the plans is that they wanted to grow into a global leadership to increase their revenues and earnings. How are they going to do that? Is to expand more, promote more shows. That means to expand their concept platforms. Because by having more shows, they will be able to bring in more revenue to the company. Then they also say they're selling more tickets via different channels, like from mobile, online. Because imagine if the tickets are only sell physical ticket kiosk, so the people can only go to the kiosk to buy the ticket. But right now, everyone has a handphone. So if everyone can buy the tickets from their handphone, then more tickets will be sold. And also, they will be partnering with more sponsorships. Because by partnering with sponsorship, they are giving a service to the sponsors to help them to promote their events or help them to run their live events as well. So these are some of the future plans that they have listed out in their annual report. Okay, so earlier on, we have a quick glance through about their qualitative, like what is the company about, and also some qualitative analysis on this. So right now, let's jump into their more numbers, which is a quantitative analysis. So here we will look into their financial statements. Okay, so first up will be their revenue. So for their revenue, we will usually look at the 10-year trend. As you can see, early days before the pandemic happened, it's slowly increasing in terms of the revenue. But then in 2019 to 2020, there was a sharp plunge. It was because the pandemic came. And if you recall earlier, the company made one of the core businesses about promoting live events. But we remember that during pandemic, everyone has to stay at home. So how are they going to run the live events? So this led to a drop into their revenue. And luckily, they are still not yet below zero. That means they still have some revenue coming in. But it was a big drop. Then after the pandemic, I believe they will start to adapt. Instead of promoting live events, maybe they were promoting some online events. And the revenue started to increase. And when the pandemic slowly dies down, where we are now in the endemic era, we can see that their revenue actually shot back up. And it was much higher compared to 2019. So is this a good news or bad news? Let's find out more. Okay, so here is a chart that I got from Guru Focus, which nicely shows the breakdown of how the revenue comes in. So here, revenue means the sales that the company generate from their products or services. So earlier on, we saw that there's 3 ways that the company generate their revenue, which is via concerts, ticketing, and also sponsorship. So here detects the percentage of the revenue that they generated from. So here, revenue only means the sales that the company brings in. But in order for the company to run successfully, there were some costs or expenses they need to expand on in order to run a successful business, such as all these expenses to produce the products or to offer the services, or even operating expenses to run the business. So after deducting all these expenses, it's only when they come to the net income, which is the profit that the company makes. But if the expenses is more than the revenue, is much higher or more than the revenue that they bring in, then the net income will become a loss. But here in 2022, we can see that there's still some income that Live Nation generated. So here is about 0.9% of their revenue, which is really not a lot. Okay, so with that, we will look into the EPS. So why are we looking into the EPS is because when we purchased the share, we wanted to know that how much earnings can the company actually generate. So for here, this is the mathematical formula, but in layman terms, let's say, for example, the EPS is 10. So this means that for every one share that the investor purchased, the company is able to generate $10 of earnings or net income, as was being shown earlier. So based on the trend, we wanted to see that it's in a positive, consistent uptrend. So here is the chart. And we can see that even before pandemic, most of the year, the EPS is actually in not above zero. But then when pandemic strikes, it just go down further into the negative zone before it jumps back right up. It's only when in 2022 we saw that it slightly picks up in the positive sign. So for this, we will say that maybe we need to monitor a few more years to see whether will the company be more profitable in the future in terms of EPS. And next, we wanted to see their cash flow. So usually we will have a quick glance at their operating cash flow is because we wanted to know that how much cash flow is being generated from their normal business activities, which from here is either sell tickets or promote the live concert events. And when it's a positive cash flow, that means there's cash coming in from the businesses, which we see that most of the year is in positive. It's only in this odd year, which is the pandemic era, it becomes negative. That means it means that the company is actually bleeding money. So like the EPS, we wanted to see that it's in a positive and consistent uptrend. And for tonight, we will look into another cash flow, which is a free cash flow. So for free cash flow, it means that how much does the company has after deducted the CapEx. CapEx is a short term for capital expenditure, which means that once the company has some money, they will want to further expand the company. So to do that, they will invest into assets that will last more than 12 months, and that expenses is known as capital expenditure. So in short, free cash flow means that the amount of money that the company has generated from their businesses where they still have after they have given out the dividends or invested. Okay, so here, like similar to cash flow, it's also on the positive, and we can see that the trend is like it's slowly increasing if we don't count the 2020. So we can see that it's slowly increasing. So that means that even though the EPS does not look good, but then we can see that the company actually has some cash flow coming in. Okay, so tonight we will also learn another financial metrics, which is known as return of equity. So why are we looking into this financial metrics? It's because this is also another metrics to measure the company's profitability. So here, ROE actually helps us to determine how effective is the management in generating the profits from their equity, which is the capital. So here is the mathematical formula for ROE. So we can see that here, how much income or how much net income is the company able to generate from the shareholders' equity that they got. Okay, so based on value investing methodology, we wanted to see that it's more than 15%. And from here in the chart, we see that most of the year is around the zero, with the exception that 2020, there was a sharp plunge. So sometimes early on, we've seen that in 2020, there was a sharp plunge was because of net income. But there's no harm that we decided to look further on the shareholders' equity, where we will look into the capital. That means the money, when the business was being started up, how much money was being poured into the business. This is known as the capital. Then retained earnings means that when the company is running, they will earn some profits or some net income. And then how much of the net income they are able to retain within the business is known as a retained earnings. Okay, so here are the numbers. So we can see that even though there's paid-in capital for the past 5 years, but then the retained earnings has not been looked good. That means the company was not able to retain the profit that they earned. And for 2020 onwards, we can see that it's actually even more severe. And that led to a negative equity. So this means that currently the ROE for this company at the moment, based on value investing methodology, does not look good at the moment. But if they're able to generate more net income, maybe this will become positive. Okay, so another thing we want to know about their debt condition. So we will look into the debt to equity ratio. So this one will help us to determine the company's long-term debt situation. And based on value investing methodology, we wanted to see that it's less than 0.5. So here it means that for every $100 of equity that the company has, they cannot borrow more than $50 of debt. And here is the chart for the debt to equity ratio. And you can see here, the red line here that shows is actually 0.5. So we see that actually most of the year, the company is actually having quite high long-term debt. But then after the pandemic happens, it seems like, hey, the company seems like there's no debt. But with us as value investors, we wanted to look further and decide that whether is it really the company has no debt. So with that, we have to look into the annual reports. So here in the numbers, we see that the long-term debt and also capital lease, that means the capital that they use to lease the venues. As we can see that for the past 5 years, it has been slowly creeping and also increasing since 2020. And their stockholders' equity, which is what we showed earlier, is actually in the negative. So we can see that actually the debt to equity is actually in the negative for now. So that means that the company is actually having quite a high long-term debt for now. Okay, so we saw that overall the company, it looks huge, it looks impressive because they are doing a lot of events, they are managing a lot of artists, but then the numbers does not really shows that the company looks very good. So some of you might think that, I waste my time to watch this, but no worries, even though the company might not look good, what about their competitors? Maybe we'll have a quick look at their competitors to see that is this the sector that we can consider to invest our money in, or maybe we should look for something else better. Okay, so now we'll look at the list of competitors that Live Nation actually has. So first off is the live music promotion. We can see that all here, these are from different companies from different countries throughout the world. And here the highlighted one is actually a public listed company. So most of the companies under the live music promotions, they are actually private companies. So that means that we cannot look into their numbers to find out how the company is doing. We can only check on their financial statements for a public listed company. And venue operators, because Live Nation, they also run certain venues or organize certain events at their venues. So we will also look at their venue operators. And we can see that most of them are also private companies. And for ticketing sales, here, they compete also against the primary ticketing service providers and also secondary. So here, secondary means that someone bought the ticket, then they resell the ticket on their platform. Okay, so for sponsorship, they also compete against the local sports team and also the national level sports team in the US. And here are the companies that is under this category. So you can see that for each of the category, for each of the business segment that Live Nation has, we managed to pick out at least one of the company that is public listed. So for tonight, we will look into these 3 companies. Okay, so now let's look at their business segments for these competitors. So for concerts, there's CTS Event Team, and the ticker symbol is EVD. Actually, this is actually a German-based ticketing and live entertainment company. So from here, you can see that most of the business segments that they have are quite similar to Live Nation. So that means that they are actually considered a very tough competitor against Live Nation. So they are operating in more than 20 countries. And then the next one, ticketing, will be Eventbrite. So I believe that some of us has heard about this company before. It's because it's actually an online platform to allow people to create, promote, and sell the tickets for their own events. And they operate more than 180 countries throughout the world. And for sponsorship, it will be William Morris Endeavour. It's actually a subsidiary of this company called Endeavour Group Holdings. So it's similar to what we saw as Rock Nation or Maverick Management. And it's actually one of the largest talent agencies in the world where they represent actors, musicians. They also produce and promote concerts and live events. So from here, we can see that they are actually direct competitor against Live Nation. Okay, so right now, before we decided to do a deep dive, there's another way we can do a quick screening. So here is some of the way that we can do a quick screening against this competitor to see that whether is it worth our time to find out whether is there any good companies or interesting companies that's worth our time to do a deep dive like the Live Nation. So here you can see that we will be comparing against all 4 of these. And then here XTER is actually a German stock exchange. So here market cap, it means that how much is the company worth as determined by the stock market. And the mathematical formula is that the number of share that is available on the stock exchange times the current share price that it has. So for now, we can see that Live Nation is actually has the biggest market cap compared to the other 3. And earlier on, we've looked at the quantitative analysis on the economic mode, where we compare between WACC and ROIC. So when we look at the differences, actually all of them, they're actually having negative mode. So that means that for this industry, there is not a very significant mode for them. But Live Nation actually wins slightly compared to the others because the difference between them is slightly smaller. Okay, next we will look into more numbers, which is on the financial ratios. So the first one we will look at is the PE ratio. So PE ratio, this is the mathematical formula of a PE ratio. So PE ratio is actually help us to evaluate the valuation of a stock. So some people might say that, oh, if the PE ratio is more than certain numbers, that means it's overvalued, or if it's below certain number, then it's considered cheaper. But here when I was doing the research, actually they have another explanation. So when the PE ratio is more than certain number, for example, some people might take 16 as the benchmark number. So for example, if the PE ratio is more than 16, it means that the investors are actually willing to purchase this share price at a premium or at an overvalue. So in short, more than 16 means that it's overvalued. But if it's less than 16, it could mean that it's undervalued, or maybe the market sees that this stock currently is might have lower expectations of growth. So all in all, it's just to allow us to have a quick glance to see that whether is it considered cheap or expensive at the moment. It does not mean that it's now the time to buy the stock. So here we can see that compared against the 4 companies, the one considered cheap relatively against the 4 companies is actually the CTS Event Time, and Live Nation is actually more than the other 3. And then the next financial ratio that we will look at is the price to free cash flow. So here is the mathematical formula for it, which is the share price divided for free cash flow. So early on, we know that free cash flow means that how much of the cash that the company has after they have given out to dividends, or they has used it for investments as such. So here, for this ratio, we wanted to see that the ratio number as small as possible, because when the number is small as possible, it means that the free cash flow is large. So here we can see that actually the smaller number here is under Live Nation. So that means that Live Nation is actually able to generate more free cash flow compared to the other 3 companies. And next, we will look at to their debt situation, which we have seen earlier. And based on value investing philosophy, we wanted to see that it's below 0.5. But compared against the other 3 companies, only CTS Event Time has a lower debt to equity ratio. And the similar is to the ROE. So only CTS Event Team is more than 15%. And Live Nation is considered a negative equity because earlier on we've seen that the shareholders' equity is actually negative. So with that, we have seen that, oh, okay, so actually most of the companies within this industry might not look good, but don't be worried about that, because even though all these companies might not look good, there are still many other different opportunities that you can look at. Like for example, if let's say there's someone say that, oh, there's certain hot stock tips, maybe you can use some of these financial metrics and then have a quick glance to see that whether is this a really good company as they said it is before you decided to invest your money. Okay, so finally, after going through the numbers and also have a qualitative analysis of the company, let's look at some of the potential risks that they might have in the event that someone decided to say that, no, this is still a good company, I want to invest in. Okay, so first off, they are actually can be severely affected by extraordinary events such as terrorist attack or the pandemic. Because earlier on, as we've seen in 2020, when COVID pandemic happens, the revenue drops significantly, which also further affects their net income. then their operations are actually seasonal. So that means that the revenue results might differ very significantly between quarters to quarter, because in their annual report, they mentioned that they may have higher revenue and also operating income in second and third quarters because most of the concerts and festivals are organized during that time, which is during summer and also early autumn. As such, when they release a not so good result, so some of the traders might see that, oh, this is not good, and then the share price might plunge. And also, earlier on, we've seen on the numbers that they are actually having quite high debt and also lease obligations. So for this, we also seen at the numbers that the expense cost for this company is actually quite high, and they have not been earning much based on the historical results. And due to the high interest rate, because they are having high debt, they might have higher vulnerability that the company might go bankrupt if they are still not able to manage the cash flow well. And they also mentioned in their annual report that they may consider to dedicate a portion of their cash flow to pay for all this debt. And if they do that, then it might inhibit the future growth, because without additional cash, they might not be able to expand the business as big as possible. So overall, these are some of the risks about the company that investors need to consider before they decided to invest into the company. So all in all, to conclude, Live Nation is actually one of the world's largest and leading live entertainment company in all these three segments. And here are the cons is that the EPS has been red in most of the years except for 2022. And it may be vulnerable to sudden incidents. And currently it's still in high debt and also lease obligations. So this is how we actually do an analysis on the company to decide whether is it a good company or bad company, instead of immediately to say that this is a hot stock, jump in and buy. So with that, I hope that you have enjoyed the analysis for tonight, and I will pass back the session to Caden. Thank you, everyone.
Hi, ladies and gentlemen, welcome back. So this is Caden again. Now I'm just referring to the last slide that Hillary has shared. Just to make sure that all of you can see the slide. Now you can see on the left hand side, Hillary had talked about the pros. If you are interested in this company, one of the world's largest leading live entertainment company. Now just by looking at this sentence, it appears that you are investing in something large, huge, exciting, and then if you are a party goer person, right now I own stock in such a company, live event and so on, you can have some boasting right among your friends, right? But remember, we're investor. The reason why we invest is we wanted to make money. Yeah, I don't think we want to invest because we want to show off to a friend that we invested in a certain company. At the end of the day, there must be some cash, right, that goes inside our company in either in the capital appreciation form or in the dividend form. So if you look at on the right side, these are the advantages. Now the question is, what is the logic that Hillary, in every of her sharing, she always talk about pros and cons. Now in investing, it may appears to be easy, and it can also appears to be difficult because we have to get the philosophy right. So what I mean by this, the primary role of an investor is not to lose money first. So this is the first priority. And the reason why this is so is because it's very easy to lose money. Yeah, you just do any dumb things, you will lose money. So it's very easy to lose money. And because it's very easy to lose money, we have to protect the downside. And the moment we lose money, right, usually fund managers like to use more complex term. They will say a permanent loss of capital. Permanent, it's not a temporary loss. So once you lose it, and that's it. Yeah, so if you look at the right side, which is why Hillary want to talk about the cons. Yeah, because once you lose it, that's it. Yeah, so our job is to protect our capital. So we have to look at the risk, which means that once she has listed out the pros and cons, the question we have to ask ourselves is, if we are right, R-I-G-H-T, how much money will we make? But if we are wrong, how much money will we lose? But usually for people who buy stock, they don't ask the second question. They only ask the first question as though they are always right. So for example, they may put money into some companies that lose money. I can give you an example. In year 2021, right, there is this company, there's this company called Shopee. If you use the app to buy things, you know Shopee. Yeah, but Shopee is just a brand, right, under a bigger company called C Limited. Huh? So what happened, it was in year 2021, the share price of C Limited keeps shooting up. It went up so high, right, it was like exponential. You can go up to the moon. So it got really high. But the interesting thing is, if you look at their profit, they have none. In fact, they have lost. So while the share price go exponentially up, the losses went exponentially down. So it's, one goes up and one goes down, right? So ultimately, a share price will not go up forever if the company is losing more and more money. And of course, reality kicks in 2022 when the bear market comes, the share price just collapse. So those who bought C right, at its top or near the top, I don't think they will ever get their money back. So which means that if we get it wrong, how much will we lose? Yeah, so we ask ourselves, this live entertainment, even though it sounds very sexy, if you are wrong, right, what will happen? Yeah, so that's the risk. So if the risk is higher than the reward, then we better give it a miss, regardless of whether it's BlackPink or Pink Black. Okay, so let me come back to here, right? Now, just now when Hillary was talking, I was just doing some, very quick research. So actually, research is not very difficult. Yeah, it's not very difficult. Yeah, when she's talking, she spent about 20 minutes. 20 minutes, I was just Googling and so on. Yeah, so I Google and then I typed in something like Live Nation Entertainment Competitors. Now, she already had the slide. So I just put it up there and then, this thing pops out. And then somebody asked this. So, okay, the first is House of Blues Entertainment. So I have no idea what's this. But on further check, I realized that this House of Blues Entertainment is also a brand under Live Nation Entertainment. So this first and second are one gang. And because Live Nation Entertainment acquired Ticketmaster, yeah, so they really acquired their competitors, so they wipe off, now they are really the huge, right? Then Eventbrite, like what Hillary was saying, and then StubHub, I have no idea what's this. Yeah, but the feeling I get just from this, it appears that they are the largest. They could be the largest. And then after that, I saw this CNBC article. They say, why Live Nation and Ticketmaster dominate, because right now they merge, right? Dominate the live entertainment industry. Really sounds sexy, right? So it seems like they are the largest. Yeah. So this article is dated 25th of January 2023, so it's pretty updated. So as of this point, it seems to be quite sexy. But remember, as an investor, the reason why we look at the numbers is, all this article, right? They want to attract viewers. So we have to check the numbers. And just now, Hillary has given some numbers, but I just repeat again. So this is the revenue of Live Nation. Revenue, that means if they sell ticket, the sales of ticket is a revenue. So let's assume that this one, the pandemic, is a one-off, right? And I disregard these two. So if I disregard these two and I join this point to this point, actually is, revenue looks nice, right? It fits a typical good company. But we must understand that revenue is vanity. Vanity. So in other words, your salary can be 30K per month. But if you spend 40K, that 30K is vanity, right? Yeah, so what is sanity? Sanity is you want to look at a profit. Yeah, so the interesting thing is the revenue goes up, right? Like C Limited, here it goes all the way up. But do you notice that live entertainment has been losing money? I intentionally draw this red line. Yeah, so the only year that they make money, right, is actually most recent. I'm not very sure what took place. Yeah, hopefully from here onwards, they will keep going up. But as of now, you look at the 10 years of data, right? There is only 1 year that they make money. How about next year? How about the year after next? It's quite difficult. Yeah, so if you invest in this company, what if you're wrong? You may lose everything. Yeah, so you ask yourself the risk-reward ratio, Yeah, and then let's go back to the YG Entertainment. Now, if I compare these two, right, YG Entertainment, which is in charge of just now the BlackPink, right, and Live Nation, out of these two, if you force me, you point a gun at me, right, to choose, I think I would prefer to choose YG Entertainment, even though it's cyclical. Yeah, it's cyclical, at least there's only 1 year negative, the rest are positive. So I want to buy a profitable company, except that I cannot stand cyclical because I do not know what's going to happen next year. Yeah, only when the company's profit is predictable, then the share price is predictable. Yep. So I think the Live Nation, we may want to consider putting aside first. Yeah. So this is YG Entertainment, right? And I was looking at YG Entertainment's competitors. Yeah, it is cyclical. Is there something good? So I found this. This is very interesting. This is YG Entertainment. They got competitor. Sing Music, Warner Music. I think you have heard before. Drum. I'm not familiar. Zone. I'm not familiar. But the thing is, only YG Entertainment is publicly listed in the stock exchange. In other words, you can buy and sell stock at the stock exchange. Private, no, you can't do it. You're a subsidiary of something. So you can't buy it directly. You have to buy it at the main company. Private, you can't do it. Yeah, so right now, what choice you have? Don't have much choice. Which is, if you want, you invest in YG Entertainment, but the profit is cyclical. Or just now the Live Nation, right, which is dead meat, right, because it's not making money. Yeah, so these two is quite challenging. Maybe it would be better if you just buy the Oreo, or listen to the CD. That'd be better. Okay, so my opinion is YG Entertainment. My thought, right? My opinion is I will give it a miss. I'll stick to maybe watching Jisoo on MTV. Live Nation, I may give it a miss. It sounds sexy, but they're losing money. I cannot sleep at night. Yep. And there's just one more thing just to clarify, based on what Hillary has said, which is this debt to equity ratio, right? Now, debt to equity ratio, she has kindly given the formula. Let me just put this formula out so you can see the formula, right? Formula is debt to equity ratio. Let me just reiterate, right? So debt, to equity ratio. Very important, right? That we understand numbers, we understand technical terms. Yeah, I still remember Warren Buffett was saying, if you do not understand accounting terms, not that you have to be an accountant, if you do not understand accounting terms, you shouldn't be doing stock picking. Okay, so if you buy stocks based on a TikTok video, right, you have to look at the mirror and do some self-reflection. So debt to equity ratio less than 0.5 is the same as less than 50%. 50% is the same as 5 over 100. So what does it mean? It simply means that if you invested $100 in any company, and then DBS Bank allow you to borrow, you should borrow less than $50. That's the meaning of debt to equity ratio. So usually these two numbers are positive. You put money in, of course, if you put $100 is a positive number, right? And if you borrow money, this number is a positive. That's why a positive divided by positive, you end up with a positive debt to equity ratio. So now the interesting phenomenon is, do you notice that here, right, is negative? And it gets more negative. I mean, why is that so? Yeah, debt is debt, right? Okay, so in other words, in 2018, they borrow so much. Okay, borrow, yeah, fair enough. So if you look at this number, you realize that their debt is actually increasing. Yeah, don't talk about this equity, just look at debt alone. So in other words, their debt is increasing. Yeah, debt increasing is not a good sign. Yeah, not a good sign, unless they could turn this debt into higher cash flow. Yeah, but the company is not making money, so not a good sign. So debt is going up, it's not a good sign, right? So why is debt equity negative, even though there's positive? This is a bit unfortunately accounting, right? So you can see here this equity. Now equity is simply assets. The formula is assets minus liability, right? Equals to equity. Yeah, assets are things that the company own. So if they own something, right? For example, if I own a piece of land, and it's worth 1 million. Okay, here's 1 million, let's say. Yeah, so liability is what I owe. So if I have a piece of land that's worth 1 million, and then I owe the bank 2 million. So what will happen? 1 million minus 2 million, I'll end up with a negative 1 million, right? Yeah, so in short, the moment you see equity negative, you better run as fast as you can. Yeah, so if you look at these two lines, so in other words, since the equity is negative, so right now the denominator is negative. Let me change to a red color, right? If this right now becomes negative, obviously, a debt which is positive divided by a negative number will be a negative number. So in summary, the moment you see a negative debt to equity ratio, better check the individual numerator and better check the denominator. And usually, if it's negative, the equity will be negative. And if equity is negative, it simply means that asset minus a liability is negative, which means that there's a larger number of liability. So in short, negative equity is a bad thing. Yeah, and then debt to equity ratio is negative. It is also a bad thing. Yeah, so now it's no good. So right now we are looking at a company that sounds sexy. like a market leader, but the numbers don't make sense. So if the numbers don't make sense, you should look at something else. Okay, so far I think better just buy the BlackPink air ticket. But the interesting phenomenon, right? If you look at professional websites such as Morningstar, right? So I have this premier lock-in. So when I look at Morningstar, they have professional senior analyst, analysts. This article is updated on 17 Jan 2023. Say a lot of things. But do you notice here? Even though the company is not so good, right? They have given an intrinsic value, and they say that intrinsic value is 105, and right now share price is 66. So now, if you look at this blindly, right, the company is undervalued. Then it becomes a buy. Yeah. So at this point, I just want to let you know that we have to be very careful in case you have attended some training. You pay some good money to subscribe to some system. They tell you the intrinsic value right now is undervalued, and then you buy. Yeah, without understanding that actually the company, even though it appears to be a market leader, but the numbers don't look so good. Yeah, so if you buy such a company where it's undervalued, but the fundamentals are really bad, it may stay undervalued, or the share price may went even lower if the company is not profitable. Yeah, so such company in such a context, sometimes we call them a value trap. Value trap, that means they are cheap, but they may stay cheap for a very long time until the profits become really huge. Okay, so as of this point, it's just my perspective that I would rather give this a miss. Yeah, give this a miss. Yeah, so again, if you point a gun at me, I think the YG Entertainment seems to be better. But again, it's cyclical, so I will give this two a miss. Give this two a miss. So we talk so much, right? So at the end of the day, when we do all this YouTube live, I just want to let you know that sometimes we have this internal struggle. So the internal struggle is we have seen other YouTube channel, tossing stock tip. Hey, this is 5 biggest company for this week, this month. Yeah, we will recommend A, B, C, D, E. If I say buy, you buy. Now we're struggling between trying to make content like this, which is actually easy for us, versus making content like what we are doing right now. It seems a bit dull. Because we say facts, we didn't make it sexy, we didn't do some window dressing. Yeah, so we're struggling between these two extremes, right? So who do we represent? Who do we identify ourselves with? So at the end of the day, I think instead of trying to toss out stock tip and then maybe have 1 million views, right? I think it's better that we state something factual. Yeah, factual. Because ultimately, we want our audience to be intelligent. Yeah, which is why we introduce terms, yes, we nag about it and so on. So if we want to be an intelligent investor, not intelligent copier, try to copy someone, there are 2 key preparation, right? So number 1, we must have the knowledge that there is no such thing as make money and then knowing nothing. We must have the knowledge to know what to do, and also to know what to do. So tonight, right, we have illustrated 2 examples. Live Nation, I think maybe it's an example that we don't do anything. YG Entertainment, I'm sitting on the fence, but most likely I will not do it. Yeah, so it's important for us to know what not to do, because if we do things that we're supposed not to, right, we may end up losing money. And of course, if you found something good, then of course you can have the cash to do it. So I'm just going to add 2 more incident that took place maybe the last couple of months, so that we know what not to do. Yeah. So this is a what not to do example number 1. Now, if you look at this article is just very recent, a couple of months ago. There is this local firm, right, called Oh My Home. They are the first Singapore company this year. Yeah, not this year, right? Not last year. To be listed in the US stock exchange, Nasdaq. Nasdaq. So I think these 2 are sisters, right? Sisters. Yeah. So Grace Wong and Rhonda Wong. First, I think I have to salute entrepreneurs who eventually grew a very small homegrown company to eventually got listed. It's not easy. It's very difficult. But we're investors, right? Yeah, we cannot invest out of sympathy, right? Ultimately, we want to make money. So to make money, we look at some of the financial statement. Yeah, remember, very easy one. You just need to check a few things. Revenue, is the revenue going up? Or going up, seems to be okay. The next one, you look at the profit, net income. Yeah, the net income is negative. That means revenue is a vanity and profit is sanity. So in this case, the sanity is that the company is still losing money. Yeah, losing money, huh? Now, if they're losing money recently, in 2022, right, will they lose money next year? We are not sure. Yeah, so as fellow entrepreneurs, I want them to make money, but by investor, you see. So if I'm not sure, then the share price will be not sure. And the interesting thing is the share price actually gone up. Yeah, you see, the IPO here, right, they make their debut here at $4. So right now it's about 560. So in other words, the share price has went up from this point to this point, right, maybe about 25%. So what's happening? So what does it mean? It simply means that there are people who are willing to pay more and more while the company is losing money. So I find these two numbers very difficult to reconcile. Yep. So again, oh my home is just to me example. I will not do it, but I do really wish that in future, right, they will do well. Yeah. So that's oh my home. And the other one is more of like a private message that was being sent to me, right? So there's this gentleman, I blank off, right? I blank off here. He say, "Hi, Kaden, have you heard before a US company Next Door Holdings?" Next Door Holdings. By the way, I've never heard before this company Next Door Holdings. So I'm just suspecting maybe somebody gave him this stock tip. Do you mind take a look at this company business model and fundamental? Wow, when he sent me this, suddenly I become his employee. Like he paid me to do this job. By the way, he's a stranger to me, right? So I have no idea who is this fella. So I don't feel obligated. But out of curiosity, this is just an auto-responder. So out of curiosity, by the site, right, I just look at this Next Door holding first. Yeah. So when I look at this Next Door holding, remember you see the revenue, right? Yeah. So I'm going to skip that. So let's jump straight to the net income. So when you look at the net income, you realize that this is a 0 line. And the company has been negative. Yeah. So Next Door holding, would I invest? Obviously not. But let me just go back to this message. Now, look at this message, the second sentence. Do you mind take a look at this company business model and fundamental? Remember I told you he's a stranger to me. Yeah, and when he's a stranger to me, he expects to send a message to a stranger and tell a stranger that you're supposed to help me, to serve me. But that's not the point. The point I wanted to make is when he sent this message, my inference is he may not understand basic accounting terms, such as net income. Because if he understand, he could just random, right, Google for the company's net income, and he wouldn't have asked me the question. Yeah, so the fact that he asked me is he doesn't understand basic terms. So if he don't understand basic terms, that shouldn't be the question. His question shouldn't be, can you take a look at this? His question should be, do I need to learn about investing? Yeah. So remember, the very basic foundation is we need to know what's happening. If we don't, we shouldn't be asking somebody else. That's very dangerous. Yeah, because what if you're wrong? And most likely you're going to be wrong, right? Yeah, so let's look at the Next Door holding. And this Next Door holding is still not that bad, right? The market is still efficient in the sense that because the company is losing money, the share price falls. So over time, share price follows the earnings of the company. So if you look at here, right, 26th of March 2021, it was $10. $10 is here at this point. So let's assume that there isn't this peak, so it's $10. Yeah, so I'm not very sure who bought here, whoever that bought at 10 right now is $2. So what does it mean? It simply means that the share price has fallen 76%. And if the fella is still holding on the stock and trying to look for somebody, hey, can you please help me to look at the business model and look at the fundamental, right? That means he knows nothing, So he will be doing his prayers so that the share price is holding right now at $2, may go up to $10 so they break even. But to do that, the price has to go up by 380%. Yeah, the chances is quite slim because the company is not making money. If it's not making money, the share price won't go up. Okay, so tonight I think we are taking the extreme end, one end of the spectrum where we share things about what not to do. Okay, so remember, there is no other way out to make money, right? We have to understand the language of money there. You have to understand revenue, like what Hillary is saying, debt to equity, just now I give some details. Yeah, cash flow. You have to understand all this. Yeah, but of course, investing, they're more than just this. And just now Hillary also introduced some new terms, ROIC. Yeah, very few people know about ROIC, unless you're a very techy guy. WACC, very few people know. And then ROIC and WACC is very difficult to calculate. Yeah, so same thing, right? Remember, we have no other choice but to know, about investing. Yeah. So what I'm going to do is, I will ask my colleague to help. But before that, I just want to give a quick background first so you know the context of this video, right? Now, if you look at my slide, it's a husband and wife. So they are husband and wife. By the way, the wife is financially trained. Later, she will say what she does. She's financially trained. Yep. So her background is in accounting. But remember, right, when you have accounting background, I think it's a good starting point because you know certain terms versus people who don't. Yeah. But if you are not a finance background, you can still learn as long as you are willing to commit to learning. Yep. So what happened is these two ladies come last time, right, before they join our class, same thing, right? Listen, you know, how is this? They listen to other people. But right now, they really become an intelligent investor. And because as husband and wife, they can still support each other. Yep. So I want you to just listen to their heartfelt testimonial of their learning journey with us. Yeah. So, yeah, my colleague.
Hi, I'm Diana. I'm actually a financial controller. So much time and is spent on working for the company and not working for myself. And this is my husband, Key. We decided to come for this event is because we think that we need to let our money work harder for us.
That's right. Before attending the class, I think our investment was very much, I would say, speculating to a large extent. You know, we just go by the flow. When people say, oh, this is a good stock, you know, this is a good company, you should invest because it's growing and then it's doing very well. And that was the information we have.
After the first session, the first two sessions, I felt that we were able to see quickly where we went wrong previously.
Yeah. After going through this class, we really know that investment or investing in company is a different story. You know, there has to be a process, a good process, good underlying fundamentals that we should look at before investing money. After all, it's a hard-earned money, right? So I think I really appreciate what Caden has shared with us, how to invest it correctly.
I think it's one of the most eye-opening session for me because I felt that what the steps that I thought are really quite simple, which can be easily executable. You don't have to think too hard. More importantly, I felt that it came across really sincere. I think I benefited a lot from it, not just from learning how to value invest, but getting to interact with Caden himself. So I thought that was very important. Definitely, I would recommend. In fact, I attended the first two sessions, and then I really did a recommendation to one of my friends. Not for anything, but I think it's a really worthwhile, if you're not even investing, it's a way of looking at things in general. It will add to your value learning for yourself. So I think I would recommend it to anybody. Yeah.
Yeah, thank you, Diana and Key. You know, even though they are not around to listen, you can, just like if you watch the video, you see Diana, she's a financial controller. Yeah, so definitely she knows about accounting. Yeah, so from this point onwards, I just want to share that, you know, there is no other way out but to learn more, yeah, to gain the knowledge. Huh? Now, there are about maybe 50 plus people who are watching this video. I'm not very sure how out of this 50, how many people are graduates who are non-grads. So right now, I'm just going to share screen, right, so that you are able to see my slide. Now, I just wanted to invite any one of you who are watching this, yeah, whether it's during this live or subsequently in our recorded version, right, to come for our master class. So the key thing is we wanted to introduce more terms, yeah, more terms, so that you know how to do value investing, which is quite important, right? So let me just share with you the 2 dates first, then I'll share with you what are the benefits by learning. Yeah. So number one, our two upcoming masterclass, right, is going to be held on the 4th of May, which is on a Thursday, it's an evening. So after work, you can just drop by, right? And before it's too rush and so on, you can choose the 13th of May, which is on a Saturday. So it's more chill, yeah, more chill, right? Then after you attend the 10 a.m., 1 p.m., you know, you go for lunch with your partners, with your children, and so on. So you have two choices. One is a weekday evening, and one is a Saturday morning. So it's really well planned, right? Now, so the most important is because your time is so priceless, precious, right? So what will you learn? So number one, you learn how to generate 3 sources of passive income, just like Key and Diana, even if you know nothing about investing. Yeah, so both of them last time they go with the flow, right? Remember? And then you learn how to invest in minimal capital, where say minimum is minimum about a 100 Sing dollars per month. So it's not as bad, right? It's not 1,000 per month. And then of course, the third one, which is most important, you can literally print cash, US dollars, using a method just like a cash dispensing machine. So these are the three key themes. One theme takes about an hour, and then we'll finish in 3 hours. So after 3 hours, I think you have a better understanding of what investing is all about. So at least you know what not to do. Yeah, don't fall into some dangerous scheme, right? Yeah. And let me share with you the benefit other than learning the 3 hours. So the moment you register, you can see my colleague already put up the link. There's one single link over here. So you click on it. I think you scroll to somewhere, there are 2 dates. You just need to select any of the date, fill up your name, mobile phone, email address, and everything will be fine. So while you're clicking, I just explained to you what's the benefit. So other than learning the 3 very important structure, right, on investing, once you register and you appear on site, what we'll do is at the registration counter, we'll pass you a hard copy manual, a printout of how you can kickstart your investing journey, right, via POSB, the Invest Saver Plan. Yeah, so the instrument is a Straits Times Index, STI ETF. Yeah, STI ETF. So I think based on the past, with dividend reinvested, it has given an annualized gain of about 7.9%. So 7.9% is better than our current core inflation, about 5+%. Yeah, but remember, I'm not ambassador for POSB, right? It's just that previously I've done it. I think it's useful. So I print out the guide, the screenshot, step by step, how you can spend 5 minutes just to set up auto pilot investing process. So when you come, you register, you appear right at the registration counter. We'll pass you 1 set, and then not only that, I'll pass you a second set. Yeah, where we can use another platform called Dollar Dex, and then you can invest in this S&P 500 index fund, which is recommended by Warren Buffett. Warren Buffett always talk about putting money in a low-cost S&P 500 index fund. So it's just by chance that years ago I came across Dollar Dex, that they have this autopilot, this 100. Yeah, so the STI can use 100, and this you can also use 100. Yeah, if it's not for you, maybe it's for your children. Yeah, so we also pass you hard copy manual. Yeah, so just by appearing right on either the 4th of May or 13th of May, we will pass you 2 sets of hard copy. Now, whether you want to do it or not, I leave it to you. Remember, just now I put a disclaimer, it's not a recommendation, but at least you have some handout, to kickstart your learning journey. So that's one. And then, of course, just now we talked about 3 things that you're going to learn. Yep, these are the 3 things. Yeah, and we're going to have a little surprise for you. So what's the little surprise for you, right? The little surprise for you is once you have finished the class, 3 hours. Okay, so what's next? You'll be thinking about what's next. So to help you further your investing journey, we're going to pass you a hard copy, not ebook, right? A hard copy of my latest publication, which is called Value Investing Simplified. So it's a hard copy book. Retail at $25. Is the most simple book ever written on value investing. And the foreword is written by this wonderful lady who is also a professional fund manager. Her name is called Miss Laura Templeton, and this is how she looked like. And what did she say, right? She said, I highly recommend Cadence Chang's book and his investment courses, which are these 2. By the way, it's complimentary, so you don't really have to pay, right? To anyone who are interested in getting started on investing. Yeah, so this is the endorsement or recommendation given by Laura Templeton. So if I could summarize, it goes something like this. Oh, there's even something even special. So when you register, you appear, you get the book and the Starbucks gift card, right? So we also encourage you to bring your friend. Your friend can be your children, yeah, your son, your niece, nephew, whoever, just another person. So if you bring at least 1 person, yeah, just 1 person will do. If you bring 1 friend, your friend will also have the book and the $10 Starbucks gift card. So nobody lose, right? Yeah, so everybody wins. But for you, because you make an effort to invite your friend, yeah, in addition to the book and the $10 Starbucks gift card, you will also receive $20 of NTC vouchers. So your grocery shopping is on us. And then after you appear on a Saturday, you can also go for a movie. $20 are enough for 2 tickets. Still got some spare, a few bucks left. So maybe you can use it to buy popcorn or whatever. Yeah, so everybody wins, right? And of course, the reason why we, so-called give out all these vouchers, watch a movie ticket, is primarily because of our branding. It's like our branding budget. We want people to remember us. You attended a class, you learn something, you watch a movie, you know that the movie is on us. It's like a friend, right? We buy you a movie, we buy you a Starbucks, we buy you a grocery. Yeah. So if I could summarize, it looks something like this. Okay. summary, something like this. So the link is already there. There are about 30 plus people watching. I assume that some of you are not our grad yet. So you can choose either one, which is 4th of May or 30th of May. Just click on the link. You don't have to read the stuff that's on the page, right? Just scroll all the way down. Yep, select the dates, put in your name, email address and mobile number will do. And then once you register tonight, because tomorrow my staff will report to work. So once she report to work, she will just give you the details. Where is it, and how to get to our place. Okay, so let's come to this. In the training industry, sometimes we are over flooded with a lot of things. So ultimately, what is really true is what people who have experience with us. Yeah, some people don't have experience, they just anyhow say things, right? So Jason is really one of our thousands of customers or students. So he give a 5-star Google review. You can always go and Google. He said he went to many investment courses. So I think there's a comparative analysis, right? So this is the only one I make money. Yep. So right now got option trading, all this quite dangerous, So in short, this is it. And if you want, you can take a photo of this. Anyway, this YouTube video is going to be here. Now, in case we end this live session and then you couldn't find the link, the link went missing, it's very easy to remember. Yeah, you just need to go to this website, www.via, because we are Value Investing Academy, masterclass. So it's 2 words, viamasterclass.com. And please feel free to share with your friends and so on. Yeah, so I think this is my last slide over here. Later I'll stop here again. So remember, these are things that we're going to help you. Just take note, for tonight's deep dive series, you are being served by 4 people you may not be able to see. So it's me, Hillary, and 2 of our colleagues, which is Susie and Irfan. Just to let you know that 4 of us represent VIA, which stands for Value Investing Academy. And our mission, right, is we care to make you a better investor. So have a good evening, everyone. So remember, click on the link, sign up for a masterclass, share with your friends, and I shall see you face to face in our next upcoming masterclass on the 4th of May and 13th of May. So have a good rest, everyone, and I shall see you soon. Goodbye.